Good morning. Welcome back to the markets. Welcome back to the market forecast. Monday, June the 1st. I'm John Hoagland. Thanks for trusting me with your time. Hope you had a good and restful Memorial Day weekend. Hope everybody sat and said a prayer for all those that gave their supreme sacrifice so that we could have a nice and free life this weekend. And we should be ready, rested and ready for the markets today. We do have a short week. It's Synthetic Monday. I've already seen Jason Cargill saying that it's Synthetic Monday, and it is. We've got 4 days this week with which to operate, and we are looking forward to some pretty decent opportunities, hopefully. Yes, it is Tuesday. I did say Monday, isn't it? See, it's Synthetic Monday, right? Synthetic Monday. It is Tuesday, June 1st. I did write down Monday there. So, as usual, on a Synthetic Monday or a Tuesday where we've had the Monday off, I'm usually a pretty slow starter. I'm pretty patient getting back into the markets. I've done my homework. I'm looking at the markets, and looks like we've got a pretty decent move started here in crude oil. We're going to look at that shortly. It looks like the opening range is the low of the session, and we've opened above an important inflection level, above last week's high, above the weekly kickoff high. We've got some longs in that market, but as long as that opening range remains the low of the day, I'm not fighting that move. As far as information due out this week, this morning at 8:45, the PMI manufacturing final due out. More impactful will probably be the ISM manufacturing index and construction spending due out at 9 o'clock Central. The rest of the week, we've got some pretty important stuff. Tomorrow being Wednesday, as today is Tuesday. The ADP employment is due out on Wednesday at 7:15. That's really the only thing impactful in the morning, but we do have the beige book at 2 o'clock. It's 1 o'clock Central. That means it's 2 weeks till the FOMC meeting. That beige book always 2 weeks before the FOMC meeting. So we'll all be talking about that as we get closer and closer. As far as Thursday is concerned, probably most of the information that's going to be coming out is on Thursday. Jobless claims, of course, as always, productivity and costs. So both of those at 7:30 Central. PMI composite final, ISM service index, and the nat gas and petroleum status report. That's at 9:30 for the nat gas, and 10 o'clock is the way they have it listed on this website. So a little bit of a different time for the EIA petroleum status report, and a different day, of course, that usually coming out on Wednesday. So Thursday for all of our energy reports due out. Friday, the unemployment numbers due out. Jerome Powell is scheduled to speak at 6 a.m. on Friday, then 7:30 the employment situation due out. Factory orders after that at 9 o'clock. So lots of information due out. I haven't had the opportunity to look at silver yet, but if it's looking anything like gold, it's probably a good day for some of those silver longs. As everybody is, I'm sure, well aware, U.S. stock indices are set to open this shortened week on a high note. The S&P nearing the all-time high that was May 10th. It happened in the overnight session, and it wouldn't surprise me for us to see and get up there and take a look as the markets continue to move higher. I'd like to see that get taken out in the regular trading hour session. Global economy and the fact that jobless claims reached pre-demic lows last week. It's really kind of what's being called the impetus of this continuation move to the upside that we've got started here on this Tuesday morning. Crude prices continue to rise on potential demand growth and ahead of the OPEC Plus meeting that is due to start tomorrow. End of the earnings season, really. We've got a Hewlett-Packard and Zoom due after the close, and that's going to wrap up our earnings season for the second quarter here. So, as always, make sure you like, share, comment, question, feedback, and heckle at will. Always like when you subscribe to our YouTube channel so you can get notifications when We do go live. Looking forward to saying good morning to everybody. Brian, first in the room, you win the prize. Theo, good morning. Good morning, Rick. James, level 2, got me some micros last night off the open and Globex. Nice. Got a couple running, may hold for the rest of the week. Looking good so far, level 2. Nice job. Richie B. Murph, patience. I don't need no stinking patience. Oh, wait. Yes, I do. Good morning. Hope everybody's holiday weekend was great, of course. Would like to see oil hit 70 by the end of the week, and then we'll see what the reaction the Feds have to see if they will allow markets to run hot or not. Of course, right. Laura, Cesar, Tone, good morning. Ed, good morning. Hope everybody had a nice weekend. Andre, good to see you. Subconscious, Greg, happy Synthetic Monday. As I thought it was Monday already this morning. Mr. Shine's Mystery Channel, hello. Tim G, Jim, Mike Magallanes, the chef, is in the room. ML, Lamus, Charles March, good morning. Has been a few months. Good to be back. Good to have you back, Charles March. It's good to see you back in action. Hopefully things are going well for you already. Rick's talking about silver. We'll see if we can get a look at that on the charts here. Felix Escobar, good morning. Keith, Vince, Trading Research, Colin, Josiah, and JD is in the room, the Dancing Bear. Tomorrow is Wednesday. It is group coaching. There's the link to get in and get your seat. I'm looking forward to returning to the group coaching after missing it last week. I had to miss it, so again, I'll be looking forward to it again this week. Always a bright spot in my week when I get to sit down and chat trading with traders. And let's see what else we've got going on here. I think we're looking at VIX is down a little bit this morning, 1661. The dollar index holding below that 90 level at 89.89, and the 10-year yield up slightly this morning at 1.62. Good morning, new trader here. Good. Well, welcome, Ryan. Welcome to the market forecast. Welcome to Top Step. We're happy to have you here. We're looking forward to your success. And the market forecast, we just talk a little bit about what's going on, what the releases are due out, what's going on in the news a little bit. We go to the charts. We look at coal. We look at crude oil, E-mini S&Ps, Nasdaq, gold, sometimes a little bit of silver, the euro, and the 10-year. And we take a look at those charts and see if we can find some good opportunities. We're always focusing on finding accurate context, using good risk management, and of course, maintaining good patience when we trade. Let's jump in, take a look at the charts here and see what we see. This is the 30-minute in the crude oil. Let's go and check the daily first. As I like to go kind of top down, we're seeing market leaning up towards the weekly kickoff high of 67.60. It was that last week, and we weren't able to get through it. We're through it now. We see the market moving. This is a new push to the upside. We're going to be watching to see if we can bring in volume and open interest. Look at the volume yesterday. Very little activity in the markets yesterday, as it was a holiday, already usurping the volume today, and they're just opening up. So I think it's going to be a challenging week for us in the crude oil. I don't really see any reason to keep this right where it is, so I'm going to take this off. Doesn't really have any true touch points on it. I've got a measured move that takes us well above $70 this week or in the coming days or weeks. Looking at a measured move up to about 71.40. So there's plenty of space upstairs here for us to continue this move. A lot of it is going to depend on the OPEC meeting and, of course, the EIA, which is this week, I should say, on Thursday. So we've got a nice continuation breakout to the upside over last week's high, last week's weekly kickoff, this week's weekly kickoff. It's going to be a challenging day or a challenging week to try and get into this market if it continues to push so strongly to the upside. We added 11,000 in open interest on Friday, overlapping to higher range. That still says buyers coming in, a little bit of higher volume, even though the kind of overall Daytime frame session was to the downside. I believe the overlapping to higher range means we added new longs. Some of those new longs are enjoying what they're going through this morning. Here's what we're looking at. Settlement 66.32. That's Friday's settlement. Yesterday was not a settlement day. So here's last week's high, this purple line right here. Going to put it right where it needs to be. Here's weekly kickoff high. We've got a lot of longs in this market, starting from Sunday night all the way through the open this morning. So there's going to be some possible adjustment in that inventory at some point. What's ideal to me would be if we were to get a little bit too long up here in a short time frame, have an inventory adjustment back to weekly kickoff high and last week's weekly high. That would give me a pretty decent opportunity, I think, to limit risk on an execution. We're going to have to see if that happens. It does appear, at least initially, that we left the opening range at the low of the session. If that doesn't hold, that may be just enough to scare some of these overnight longs, which really started on Sunday night, to need to adjust those inventories, to get a little bit nervous, get out of some of those longs, give us a chance to look for longs at a better trade location, i.e., weekly kickoff high and last week's high. In a perfect world, we'll see if that happens. Okay, so here's the S&Ps. Let's get them nice and big here so we can all see. 42.20 was weekly kickoff last week. It remained weekly kickoff. It is now a potential accelerator to the upside, if you will. Here's our all-time high that occurred in the overnight session. Markets don't like to leave that. We've come a long way to come up here and see if we can't take out this overnight high in the overnight session in the regular trading hour session. If it doesn't happen today, it's going to happen at some point. We've had a kind of a 5-day balance here. Typically, if we can't accept outside of the balance, we go to reversion trades. We're going to open with a gap. We're going to open above a couple of important inflection levels, as in last week's high and the weekly kickoff high from last week. So the fact that we're going to be opening outside of this balance area could be marking acceptance of higher pricing right off the open. I'll be watching the opening range trade. Remember, for 42.20 weekly kickoff high here is pivotal for us. Weekly kickoff low is all the way down at 40.94, all the way down here. So there's a lot of room for the market to kind of continue to rotate or consolidate if we can't hold above this. This is not going to be a market state breaker to the downside. It could, however, be a market state changer to the upside. We've been kind of range bound a little bit here. We may see this market continue to bring in buyers on this. Of course, we'll be watching open interest, adding 8,200 on Friday, right up against that weekly kickoff high, right at the weekly high. Still money coming into this market. So, without any bad news, what's keeping it from continuing to move higher? It's just what it naturally seems to do. Do we have a lot of longs in this market? Well, from last night, about the London session is really when we started leaving settlement, which was, again, Friday's settlement price. Yesterday, not a settlement date, 42.0250. Continuing our move to the upside, we're going to be opening above a couple of inflection levels. Watch the opening range for a potential opportunity. Also, we've got to be careful, because if we are holding longs here and we don't find what they're looking for, what are our longs looking for in crude oil this morning, in the S&Ps? They're looking for new business to come in and continue to push pricing higher so that they can continue to get paid. If they don't see it, we could see a pullback, which would give us a better trade location for longs if that is part of our plan. So watching the open, looks like we're going to be opening above these inflection levels. Watch the opening range. If the opening range remains the low of the session, might mean that buyers are in control and may be in control for an unknown amount of time. If the opening range is the high of the session, that might mean we could see a inventory adjustment back towards settlement, and then we'll have to adjust our strategies at that point. If we can't come down here all the way and close the gap to yesterday, that might be an interesting sign. Remember, what doesn't happen is it important what does. If we do get an inventory adjustment but can't close the gap, that's going to be saying, all right, maybe we're going to see a bottom put in here and see another push towards an acceptance above that weekly kickoff high. Nasdaq. Okay, Nasdaq weekly kickoff levels are 13,796 on the top end, and on the bottom end we've got 13,433. Last week's range is here in purple. We're still pretty range bound here. Okay, we have no real potential breakout unless we start getting above last week's high and then start testing weekly kickoff high. We're still kind of an upside digestion here. The market is really trying to get us to it's going to open with a gap, but we're still kind of range bound here. I'm going to be going with either acceptance above last week's range and this week's weekly kickoff, or if we can't hold against it, I'll be going with rejection. But be careful. These are these pivotal zones like this can be tough because if you're thinking long above, short below, long above, short below, you can get yourself cut up pretty quickly. So be careful. Here's the 30-minute chart. Okay, so obviously opening with a gap from yesterday, settlement from Friday, again, a non-settlement day yesterday, 13,686.50. Put that on your charts. Are we holding some longs? We're still inside range and value and inside last week's high and inside the weekly kickoff level here. So we're not really seeing the continuation or the strength or the momentum in the Nasdaq that we're currently seeing in the S&Ps. Remember, they are similar but different. Trade what you see in your market. This is a different situation. We got some longs here, but we're still in range. We have not broken out of any important inflection levels. It's going to change things a little bit for me for the Nasdaq. Still testing the range. I'm range bound. Adding 700 in open interest on Friday. Not impressive. Not impressive. Gold. Okay. 1934 weekly kickoff high. Weekly kickoff low 1884. Last week's range in purple. We are trying to push out above last week's range. We have, because yesterday isn't a settlement day, some charts will blend yesterday and today into one bar. The market's trying to go higher. Very low volume yesterday, of course. Already higher volume today. 9,200. We lost 9,200 in open interest on Friday. Friday's this bar here. We talked Friday and I think Thursday about this starting to become a bull flag. We broke out the bull flag and lost open interest. That tells me I think that we got a little bit too short near this low here, and that 9,200 decrease in open interest was with a lot of those shorts saying, the heck with this, we're out. Now we're starting to see continuation above a bull flag, which is what we would expect. We got higher highs, higher lows, higher highs, higher lows. We've got 3 days now of higher highs and higher lows. This is what we would look for in a breakout of a bull flag, but it's not really showing that much as far as momentum is concerned, at least not yet. There's the bull flag. Here's our breakout. This was Friday. Settlement, 1905.30 from settlement from Friday. Remember, yesterday, not a settlement day. Are we holding some longs here? Maybe, maybe not. This whole kind of consolidation since Sunday night it probably has done a lot to kind of even out inventory, but the market now trying to move higher. Came down, filled the gap to yesterday very closely, and now is continuing to the upside. So, we're ending rollover here in gold, losing 9,200. That may have also been somewhat rollover related. As long as we can hold this gap, and as long as we can continue to kind of one time frame higher here, I'm going to look to buy gold on weaknesses. Had a pretty decent opportunity off these Hull moving averages before the open here, bringing in some more volume. Not quite sure what I think of this yet. I probably would be looking for opportunities up near our weekly high from last week. What's happening in silver here? Silver. Oh yeah. Yeah, we're getting a nice little continuation here, aren't we, Rick? Higher highs, higher lows, looking good. All right. So the euro, the attempt to continue to the upside is struggling. Volume is holding okay, but losing open interest on Friday. The market is really kind of range bound here. I'm calling this an upside digestion, but I think there's really kind of more of a risk of a continuation of this congestion, or more of a pullback. I haven't really had the opportunity to look into that, do it that deeply. It's kind of off the radar, pending some sort of change. We lost 3,700 in open interest on Friday. Again, perhaps we got a little bit too short in the hole down here. Range bound, short time frame control. I'm going to be really patient in this market. Take a look at the 30-minute chart. Last week's high, last week's low, centrally located, lots of overlapping ranges. Last week we talked about the fact that there was some weakness in structure down below, and the fact that we had these 2 points of control. We basically took out those 2 points of control on that day. Range bound, looking lower. Just not a lot of directional activity in this. And until it changes, then I'm going to kind of put this on the back burner. Now, the last time I did this, I put it on the back burner. We came up with a pretty decent trade. We came up with a pretty decent opportunity that day. Today we're in range, we're in value, we're in the bigger picture of range. I'm going to stay real patient in this. Gonna kind of put this on the back burner, just to keep one eye on it and see if there's any opportunity as the day goes on. Here's the 10-year. Overall upside structure remains very gentle, not a very powerful move. Rates, what was it? Up just a little bit today. So again. Here's last week's range. We're right in the middle of it. We've got weekly kickoff that's very wide. I think I've actually amended this. This is actually 131.27. So it's more up here now. So I failed to bring that up, or something happened. But we're getting, I think, a lot closer to creating some sort of bigger momentum in this market. I have no idea when, but just the way that it's acting is in short time frame, and I'm going to treat it that way. I'm going to be looking for short time frame levels with which to look for opportunities, and I'm going to try and stay very patient in it. All right, so here's settlement up here again. Friday settlement 132 and 27 and a half 30 seconds, and yesterday's very small range, really still kind of range bound from Friday, rejecting value from Friday. There's I don't see that there's any really good fish swimming around in here. So I'm going to fish in a different pond, I think, for the better part of the day. And should something change, then I'll have to adjust my my view on what the opportunities are in that euro and in that 10 years. So again, stay patient this morning. There's no reason to try and rush into anything. Hopefully, Oleg, you got your levels there. Personally, looking for a continuation. Entries 42.10 to 42.15, level 2. Vince had a nice holiday weekend, took a 10-tick loss, and the gold this morning came down, took out my stop, and now is rallying back up. It just seems to be one of those cycles that you're in, and we're going to work on getting you out of that. Don't worry about that. So we got a couple minutes here. I'm going to take my deep breath. Looking forward to seeing everybody. I think we're going to be doing a coach's playbook today, I hope. And other than that, I'll see you tomorrow morning. Dan should be with you again for the for the market recap today. And I'll be back for the forecast tomorrow, as well as group coaching. Take your deep breath. Stay humble, grateful, and creative. We've got 4 days to work this week. Don't push it. Don't push it. You don't have to make up for yesterday. Look for the right opportunities. Make the market come to you. Small risks, big rewards. Get out there and profit, trade well, and we'll see you later.